It wasn't until near the end of 2018, years into the tightening cycle, that an unseasoned Fed chief, Jay Powell, unleashed true carnage on the stock market. Jay Powell hit us with 4 rate hikes and promised many more to come, which made things really, really ugly at the end of the year. Also, it didn't help that President Trump began to ramp up the trade war with China. I thought that was necessary, even if the execution I felt was a bit botched. But Wall Street hated the trade war. Nevertheless, through the first 3 quarters of 2018, the market was up nicely. Then the White House turned extra hawkish on China, while Jay Powell turned extra hawkish on inflation, a 1-2 punch that sent the S&P 500 down more than 20% in the fourth quarter, knocked 25% off the NASDAQ. Fortunately, we got some relief when Powell immediately changed course in January 2019. He realized that he'd whipped our nascent inflation in the bud, but that was a terrible period. That, again, was botched execution. That's why I do care about the way the language on Wednesday. What's the takeaway here? While the Fed absolutely has the power to wreck the stock market, they do. Like we saw at the end of 2018, they did. That typically happens near the end of a tightening cycle, not near the beginning where we are. If you sold stocks in 2015 because you were worried about a looming series of rate hikes, and many did, you missed out on some tremendous gains over the following 3 years. So don't let all this rate hike chatter sour you on the entire asset class. Stocks can do very well when the Fed's tapping the brakes. It's just that we get a different set of leadership groups. As we head into 2022, you want to own companies that make tangible things, sell them for a profit, especially if they return the profit to shareholders via dividends and buybacks. That will be my theme for 2022. The bottom line, the Fed may no longer be your friend, but it hasn't turned into your enemy either. And if the last tightening cycle is any guide, it won't do that for a very long time.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.